Hi everyone. Can you hear me well? Yeah. So yeah, I'm Oleksiy. I'm head of product at Mento Labs, and at Mento Labs, our mission is to bring the adoption of digital assets to mass market, and we are doing so by developing Mento, which is a platform to launch and operate stablecoins on Celo blockchain. We at the moment have 3 assets live, which is Celo Dollar, Celo Euro, and Celo Real. And in today's talks, I wouldn't talk that much about like technical details of implementation or how do we solve stablecoin trilemma, but instead I want to talk about use cases of next stablecoins and how we can see new products launch in the market. Despite us being in the woods of bear market for a while, I would say that stablecoins actually still show considerable traction with users. On this chart, in a blue line, you can see total value locked in DeFi, which we probably all know went down significantly since the Terra Luna collapsed, and it decreased by around like 75%. And the green line is stablecoin market cap, which also went down, but it didn't go down as much as the whole DeFi space and decreased by roughly 35%. And if we look closer at just stablecoins, there is actually at least one stablecoin that has the same market cap now as before the crash. Anyone wants to guess which stablecoin is that? Yeah, that's correct. The green line on the top is Tether, and now it has the same 82 billion market cap as it did 1 year ago. And if we look at Tether specifically on Tron, we can see that its market cap now 10 billion more than it was before. And I think part of the answer to this question lies in this picture. Anyone wants to guess what these numbers mean? Yeah, that's correct. This is inflation rate in countries around the globe. And as you can see, it's like there is no country where the inflation rate is 0, but in some countries this goes to 40%, 50, 70, 200. And what inflation actually means that with the same amount of money, you can now buy less goods that you can do 1 year ago or 2 years ago. And if you live in a country where inflation rate is 20 or 40%, naturally people try to preserve their savings or their earnings by moving them to more stable currency, and US dollar happened to be exactly such currency, and people in those countries seek to buy dollar, and this puts even further downwards pressure on already suffering currency, so the government imposes a limitation on how much dollars citizens can buy. But people access them anyway through crypto rails, which happen to be USDT on Tron because it's the cheapest way to buy it because of low transaction fees. But the currency depreciates in value anyway. And this graph on the left, we can see that 95% of wallets holding USDT have balance between $0 and $1,000, which I think proves the point that people from the countries with underdeveloped economies try to preserve their savings in this stablecoin. Now, why am I talking about Tether so much in my presentation? I'm by no means not advocating for USDT or Tron or Tether, but I think the point that I'm trying to make is that USDT is successful because it has very solid use case for users around the globe. And people want to buy US dollars specifically because it's de facto world's reserve currency with 59% of exchange reserves held in this currency, and it is considered to be the most stable which is available in traditional economy. On this map in black, we see the numbers of people who do not have access to traditional banking accounts. And while this number is significantly low in North America and Europe, in regions like Latin America and Caribbean, Africa, you can see that there is 40% and more people who don't have access to traditional banking system. And this is also, I think, happened to be the region where people try to access USDT. And now, again, like to the importance of solid use case, we also, aside from USDT, we actually have a lot of Euro stable coins. We also have one on the platform, but there are multiple of them. There are also stable coins tracking Canadian dollar or Singaporean dollar, but none of them get any significant traction with users because in those countries, people already have pretty efficient banking system with, I would say, considerably better UX than what the crypto industry can provide. So the point that I'm trying to make is that more likely we will see emergence of local fiat stable currencies in the regions like Latin America or Africa. And now I want to give a couple of examples of projects from Celo ecosystem who actually have such use cases with their core businesses. The first project that I want to talk about is called Impact Market. They use Web3 technology to provide accessible financial solutions to people in impoverished regions around the world. Their core product is unconditional basic income that they distribute to beneficiaries in regions around the world. But recently they also started doing uncollateralized microloans. And they sell $1 for their operation. And while for universal basic income it makes a lot of sense because it's more stable than local currency, when we talk about microcredit, it's actually completely the opposite. Because people are getting microcredit basically in dollars, but they earn in local currency, which depreciates against dollars, which makes it much harder for them to repay those loans. And this is why we are now exploring together with Impact Market an opportunity to launch local fiat currency in regions where they are active to make these microloans accessible to even more people who will be able to successfully repay them. Another example of product with the use case is from our partner Dunya. Dunya provides payment services in Francophone countries in Western Africa. They have a network of 25,000 merchants who use their services for regional settlement in local currency, which is called Central Western African franc. And they use it to transact between different businesses across 12 countries in the region. But they also provide services to on-ramp to USDT for those businesses to pay their overseas suppliers. And yeah, apparently companies in China accept USDT as a payment method, even though the currency is officially banned there. So Dunya is now launching ETHWarsaw, which will be a digital version of West African franc on Celo. And it actually will go live, I think, in 2 weeks from now. Depends on how governance proposal will go. And the idea is that with offering ETHWarsaw to their customers, they still will be using the Dunya's API for payments, but they can now evaluate costs associated with third parties like banks and mobile money providers, making the transactions cheaper and also faster with close to instant settlement. But what I think even cooler than that is that now when ETHWarsaw is adopted by local businesses, those businesses also will start accepting this currency from their end users. And in Celo ecosystem, there is also a mobile app called Valora, which is a mobile wallet built specifically for regions like South America and Africa, and it already has a big user base in those countries. And now when we have ETHWarsaw as a local payment method, we can enable people to access digital economy who didn't have access to it before. Yeah, and I want to go back to this graph. So like the fact that dollar is so dominant as a reserve currency opens up for us a couple of opportunities. So first of all, it's actually a pretty good currency to be used as a collateral to issue other local stablecoins that are weaker against the dollar. But second of all, in like real economy, dollar takes actually just 59% market share, while in crypto economy it takes around like 99.5% share, which means there is a huge discrepancy between on-chain economy and real economy, and there is a lot of opportunity for crypto to catch up to have like quite similar distribution to these numbers. And once we have this network of multiple stablecoins that are interoperable and liquid against each other, very interesting opportunities become available. For example, something that didn't really happen before, but could happen, the on-chain forex exchange market can emerge. The traditional forex exchange is clocking in staggering $7.5 trillion in volume per day. Imagine if we could bring at least a fraction of that on-chain. And I think there are obvious benefits of on-chain FX market, like, first of all, it will be significantly cheaper. The transaction, FX transaction will cost around like 5% of current cost because you don't have banks and brokers as intermediaries in the process. The market will be open 24/7, which is not the case at the moment, and also it will enable instant settlement. At the moment in the fixed market, settlement tomorrow is actually a pretty standard thing. And also it will be directly accessible for without intermediaries and no barriers, and you can access it like if you need to exchange $5, you can also do it on Uniswap. Which is, but you really can't really do that in traditional FX market. Maybe I push it through and we do the questions at the end. Is it okay? Another interesting use case is something that I call cross-border settlement currencies. And to give an example what it can be, I want to look at the traditional finances again. And there is an asset that's called SDR, which is Special Drawing Rights. It's an asset developed by International Monetary Fund to supplement the official reserve of its country members. And SDR is backed by a basket of currencies like US dollar, euro, Chinese yuan, yen, and British pound. But if you go to IMF website, it actually says that the SDR is also available only to their member countries and central banks, but not to the private sector, which kind of makes sense. But they created like for their certain use case, whatever. But blockchain actually allows us to provide tool like this to broader audience. And businesses can use it to hedge against current fluctuations. So instead of like holding just US dollar, you can hold this asset which represents a basket of currencies. And actually, but it doesn't have to be like specifically SDR-like. It can be any combination of any stable coins with different weights, and it can be like very customizable. And yeah, even like if there are two companies, they can agree, and one is, let's say, in Thailand and another in Malaysia, they can agree on certain percentage of like currencies that they want to have in the basket to agree on which FX risk each of the parties will take. But to enable those use cases, of course, it wouldn't be enough just to launch stablecoin. We need more than that. We need efficient trading pairs between these assets. Hopefully, they also all will exist on the same blockchain. We need to provide tooling that enables cheap and efficient on and off ramp to fiat currencies. And we need better account management and reporting tooling that has much better UX, user-friendly to broader audience. Because honestly, I can't imagine many businesses outside of crypto using something like Gnosis Safe, for example. And when we talk to our partners who provide services in Mento stablecoins, the current user journey to get to stablecoins on our platform is quite clunky. You start with money in your fiat bank account, then you use some exchange, usually it's Binance, to get some stablecoin like USDC or USDT. Then you on-ramp to blockchain, usually it's Binance blockchain. Then through bridge you go to Seller blockchain, and only then you can mint Seller reality currency that you actually wanted to access. And this obviously takes a lot of steps, and people don't really want to do it. And this is why we are developing something that we call Mate or Mate, depends who you ask, which is a SDK that wraps all these steps and provides like very smooth experience. And now our partners can integrate it in their workflow and automate movement to our stable coins and back to fiat. And this tool actually will be open source, and it doesn't have to work like specifically for Mento assets. It will be available for any token on any chain. So if you think that you can benefit from using it, follow us on social media to know when it will become available. But going back to this picture representing inflation and bringing value over time, if you want to turn this into this and to help people to preserve their purchasing power, maybe there is something better than fiat stable coins. And if we go back to this map, as I said, there is no single country where inflation rate is 0%. And it never will be, because inflation is actually by design. It's a feature of fiat currency, it's not a bug. So if you want to preserve value over time, we need something different. And this is like still very experimental stage, but something that I'm pretty excited about. It's a concept of stablecoin, also called flat coin, which instead of being pegged to some fiat currency, will be pegged to consumer price index in certain country or a certain group of commodity. For example, it can be pegged to the price of energy if some business is interested in this particular category. But I don't think that we are at the moment that this is ready for the mass market, and there are at least two big problems that we need to solve before we can offer this product to consumers. And number one, that we need to have reliable price feed for such data on chain, and which will be challenging, especially in the regions where such currency is needed the most, because it's quite difficult to get reliable data about consumer price index in some African countries. And the second is that we need to find the right collateral to back such assets, since like any fiat currency is losing value against this asset, not even dollar is a good collateral, because you will always be at risk of under-collateralization. So I think once tokenizing a real-world asset gains more traction, this is where we can think about building products in this category. So to summarize, I think going forward we will see innovation in the stable coin space going in incremental steps rather than huge evolutionary leaps. We need more operators from different countries launching local stable coins with some like very solid use case in mind. And we need much better tooling both for on and off ramping and for general user experience, like better wallets both for end users and corporates. And we at Mento are doing our part in this direction. This is why we are developing Mento Platform, which is a set of tools like Oracle's infrastructure, and we are now integrating with Redstone to provide even more price feeds to potential operators of stablecoins. We have different issuance and redemption mechanisms available. There is a governance framework and supporting tooling, and using all of these, operators will be able to launch stablecoins without need to know how to develop smart contracts in Solidity, but instead they can focus on experimentation and economical design and user adoption of those stablecoins. And that's it. And yeah, if you think that you have an idea of stablecoin that will benefit your business, please reach out to us and let's brainstorm together. Thank you. Okay. Any questions?
So the question is about these new stablecoins that are delta neutral, right? So during the ETHCC, mainly this Ethena new stablecoin was doing rounds on Twitter, which kind of like was created as a result of, I think, one of Arthur Hayes' articles, where basically you have like a bunch of fully crypto assets. There's like no actual. So the idea is to like break the tie between the TradFi and DeFi. So create a stable coin that is fully on chain. And I think the way they're trying to do it is basically have a basket of crypto assets, and then they're hedging those assets on different DeFi protocols while creating some sort of a very small yield. Yeah, and I was just wondering if you have a take on this new stablecoin design, because it's apparently like something new. I don't know if you're aware of Ethena. Maybe not then. Yeah.
No, to be honest,
no question really.
I'm not aware of it. But for example, like in our platform, you can say the stablecoin is also completely on chain. We have a reserve that is completely on chain, and so like if USDC, for example, they have assets in bank account like fiat dollars backing their stablecoin, our reserves are fully on chain, and it's also like a distributed basket of like 5 different assets.
Okay, cool. Yeah, I guess. Yeah, no really question then. Thank you.
Thank you.